podcast. Boom, 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 boom. Good morning. Good morning. I'm late. I got to turn down my volume. I've got Do Not Disturb on. Let me just make sure. Yes, I do. Let's go to YouTube. And hopefully we're live. You got to be kidding me. Did it schedule it again? Auto script. Did it schedule it? Your channel. Oh, I am live. No, it didn't schedule it. It's just not showing up. Okay. I guess I'm live. I wear the same damn thing every day. So I never know if I'm live or not. Let's see. We're going to open up the podcast recording. We're going to get our notes ready. Active Trader Pro is not starting, so I've got to force quit it. Active Trader Pro, force quit. Force quit. Boom. Yesterday's show was a long one. Nobody listens to the long ones. What just popped up here? Active Trader Pro. I don't think anything popped up. Hold on one second. I know you're seeing a black screen. Force quit. Force quit. There we go. And then I don't know why you see a black screen when I lower it like that, but you do. Oh well. And GarageBand, and then we're going to start Active Trader Pro. And give me a second. Morning, Brian. Zillow Group. Yesterday, didn't they have a great day yesterday? I said Zillow Group I thought was going to have a big one. And again, stock picking isn't, it's not genius. 46 was the buy-in right on the day. I said, hey, probably at 44. So you're not quite up 10%, but you're close. You got the MACD cross up there. You've got the RSI. I mean, the big thing was, let me look at my notes from yesterday. Let me just get this set up. Okay. Delete you, buddy. Delete you, buddy. I don't know why it keeps asking me this, but I need to reinstall. This weekend, I'll reinstall Active Trader Pro because it just doesn't seem to work with this. And I am fasting today, by the way. I ate so much crap last night that fasting just seems like a smarter decision this morning. But Zillow Group, in my mind, I think real estate continuing to go up. Zillow is the number one site that people go to. Kind of put it in your mind. If you're buying a house, you're going to Zillow. They got rid of, and they did all of the work that needed to be done prior to yesterday's earnings. It was well known. They got rid of their investments, the houses that they were going to put together. Just makes sense. I mean, Zillow Group is, 21 cents a share, 38. I mean, they didn't blow it out of the water. They didn't do anything crazy, but they made money. And you can look at FinViz. Just go to Zillow Group here. Not AG. We don't want silver. CG. Their forward P is 41, so they're not quite cash flow positive. Year to date, they're up 50%. It's a little steep in my mind, but over 1 year, they're down 27%. So, upgrade yesterday in line for $61 price target. January, this guy had a $42 price target. They're going to come back. mean, look in December, there's a $50 price target, and you're trading at what, 47 today? So you still have about 10% left to go to get to those. Now you look at the sales, and these guys sold a hell of a lot at 46. It's hundreds of thousands. It's not millions. These are people who need pools in their backyards for the summer. That's essentially what it is. I mean, feel bad for the people who sold at the end of the year in the 30s. But there's no $1 million transactions here. I would be worried if there were millions of dollars of transactions, but I don't think I'm too worried about it. Yeah, I tend to agree with you, James, that, you could probably, and it was asked of me yesterday, how do I buy? And I've told you guys how I buy. I buy in small lots. And I never buy on an up day. I usually buy on down days. A good example of that is Wells Fargo. Not AF. Why am I doing this? WFC. Wells Fargo. I mean, I'm tempted to sell the Wells Fargo because I bought it back here at 41.50. It wasn't like I'm looking to kill this one. I mean, it's been a great trade. I even got the dividend. So, I think I only traded $2,000 worth, and I said it at the time I wanted like $10,000 worth. But I haven't bought this entire time. I'm just kind of waiting. I might sell it, might buy back. I mean, there's no real reason other than tax reasons. So I've got to take that into effect because taxes, again, do you want to pay an income tax, which is typically on average 19 to 22 up to 25%, depending on your tax bracket, or do you want to hold it for a year and just pay 15%? Yeah, I mean, you can clearly see if we go here to a daily, you've almost got double top here, just between November 11th and November 22nd. Then you hit it right here. So you've got three tops. I mean, it's clear back here, 1, 2, 3, that 46 was your resistance. You broke through that. You broke your 200-day. The only thing I would say is with rising interest rates, these guys and the rehabilitation of Wells Fargo. Look at, if you go back to let's go back to a weekly, and you look pre-COVID, this was a $55 stock. It's probably where you're looking at. I mean, you have this gap up here all the way back from 2018 at 60 in a healthy market. I mean, you look at 2022 at the heights of the market, you were up at 60. So I'm not necessarily looking at crazy trades. I'm looking at, hey, do I want to hold this one? Even my algorithm, which is a 4-hour algorithm, it loses you 9% on this one over 2 years. If you just bought and held, you'd make 26%. So it's a good one. I've been pretty happy with the performance, but I haven't made my decision if I'm selling it. I think my purchase date was, let me see. It was right around that time where it triggered on the algo. So it was December. So I'm looking at probably holding it till December. If we head into a recession and you have higher interest rates, Wells Fargo's not going to get killed. They're going to get hurt, but it's not going to go. In my mind, I don't think you see the 30s again on this one. If you do, I'll probably sell out before we get there, just because it makes sense. Don't hold on until 41.50 again, unless again it's something that you want to add to, and I don't think it's a bad one to add to it. TRV. TRV's got the confirmation. I mean, if you bought at the algo at $40, you got 5%. Walmart's such a good stock. I mean, I don't trade Walmart. I own it, but I own a small position that has grown over time. But Walmart's a good one. I'll look at ATR. I got to get to my scans, but let me look at ETR. Walmart here. You've used the 200-day as kind of support. I mean, all the way since December. And if we're going into a recession, this is one that will probably do well. I think if I were to bet on which one's going to do better, I would say Target would be a better earnings play than Walmart. And the only reason I say that is because Target's issue is inventories. In fact, I'm going to bring it up today. Stephanie Link was on CNBC this morning. She gave 5 stocks: Nike, Starbucks, D.H. Horton. I think that's what it is. The home builder, and Target. And she mentioned it, and I mentioned it too. It's all about inventories with Target. I mean, that stock has moved on inventories in the last 2 or 3 earnings. Nothing more than inventories. So, what's ETR? I don't even know what ETR is. Entergy. Are they an energy company? I believe with that kind of name, they should be. Entergy. Utilities. Utilities are good, and if we're heading into a recession, and I'm going to mention this, I said 215, February 15th was the time that I thought the stock market would crash. Well, you're down a couple hundred points yesterday. You're going to open up a couple hundred points down today. Entergy downgrades, two downgrades of recent, 119, 128. They have a 4% dividend, 3.95. You are exactly in the middle range. 94, the low, 126, 52-week high. You're 14% off both. Year to date, 3% down, 4% over a year. I mean, you're buying in the middle, and you're getting a 4% dividend. In my mind, here's the way I look at something like this. Am I going to grow my capital? And are you going to go up towards the 120s? Because at 3.95%, in it, you're restricted on utilities. I mean, it's got a heavy PE at 17. Forward PE is 16. I'm getting 4.5% on a savings account right now. And in a utility, which is regulated, which has... It's close. I mean, if you get to the 119 or the 128 price target, which are of recent, that's a good growth in a year. But right now, I mean, it looks like a lot of people are selling at 120. Looks like 120 is probably your cap, between 110 and 120 from the recent sales that I see of the last year. But nobody's, they're selling in small volumes. This sale by the chairman and CEO at 120 at $2 million. He exercised some options that were given. They're probably RSUs. Blah blah blah. So, happy Friday, William. Let's see. Dude, this is Humana. James, you've done well with Humana, I think. Look at that gap. Yeah. Boyle is... You can trade Boyle. I don't want to say long term Boyle is bad, but natural gas prices, I mean, you're heading into the summer. I said under 6, I think I would trade it. But in this market, if we are heading into a recession and natural gas, energy is going to continue to go down. I mean, look at Devon. Look at your energy names. They're just getting killed. And so, I question whether energy is going to be our leader, or if it's actually going to continue to go down because we're heading into a recession. You can see on the 4-hour here, we still don't have the MACD is still crossed at 1403 on Boyle. So you haven't gotten out of this. It hasn't crossed down in this entire time. So if you've got an ascending MACD and a declining share price, that's convergence. That means stay the hell away from this. But, it's at 578. It closed it's at 549. I mean, it's down another 5%. KOLD still has the run. By the way, Sherry gets legendary status. She helped out my housekeeper yesterday. We will say that. My housekeeper that needed help. So thank you, Sherry. Again, I really appreciate that one. Came at the perfect time. So Sherry wins. Yeah, and it's funny. Yesterday's here, and I'm just gonna look at SPY. I'll show you guys SPY. Remember I said yesterday we had a full week of green candles? Well, the morning candle yesterday was green. We opened at 408. We closed at 411. The afternoon candle was horrible. We opened at 411. We closed at 408. So just a complete reverse. And the MACD's kind of crossing down. I would question whether today the moving averages move down and we actually get out of this kind of run and maybe make our way back to about 4,400, I should say, on the SPY, but 4,000 on the S&P. There's a lot of conflicting news in the you got your producer price index yesterday, you got your some type of number today, which all looks like the Fed is going to hold. You had Feds and governors saying yesterday, hey, we're going to hold higher for longer. And they all said, we think we should have done 50 in January. So that puts 50 on the tape for March. So let's do our scans. I'm going to do a scan, and I don't know that I'm going to bring up a lot, but let's do them. Scans. Boom, 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 boom. Hey, James, how'd you guys do with, I think it was GLYC yesterday? Zephin was saying you guys were in this. It was up. What was it? Let me see. Oh, you guys did well yesterday. Because we were looking at $1.50 and it said $1.80 now. It's really well. Okay, brokerage holdings, nothing. Core investments. Cleveland Cliffs. Interesting. Boyle is the same thing as that's nice. Kudos, man. ALB. Levered ETFs. TARK had a cross up, and SDAO had a cross up. This is the 2 times. I don't know why. I mean, I shouldn't even bring this one up. I'll bring it up. What the hell? Why didn't SARK have a cross up? SARK is crossing down. That might be in. Okay, levered ETFs, low-cost Vanguard. Let's look at these. Nothing in low-cost Vanguard had a cross-up. Let's look at the spider sectors. Anything in here? Nothing in there. Let's go down to my personal watch list, which has a ton. DraftKings, which I don't own. I sold out. 10% gain. Lowe's had a cross up. Bum, 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 bum. But I'm not going to bring that one up. PBW. This is the clean energy ETF. I like QCLN more. Beyond Meat had a cross up. Boy, right before earnings. With all of the hype names getting like crazy good runs, is this one that I should bring up at 17? It's above. It's got that golden cross here. I mean, it was trading at what, 18 with the golden cross, and it's at 17.11 now. But the 50-day is still moving up. I mean, it's been holding it. It held the 200-day. I don't like it. I'm not going to bring it up. Zebra Technologies. No. Bitwise, 10 crypto index fund. I mean, shit. This one. I mean, December 29th, $4. Today you're at almost 10. And you had the golden cross. BITW. What the hell? I'm going to bring this one up. QDEL, which makes COVID tests. It's not just COVID. They make home virus tests. I think that hype's gone. This is Nintendo. That is the foreign stock for Nintendo. Sundial. This is a crazy one that you could trade. Baba had a cross up? Oh, it does. Hold on. We got to look at this one. Yeah. Huh. And if you haven't heard, there's an executive, a Chinese executive, who has gone missing. Kind of like Jack Ma. ARKK had a cross up. I just think your Smile Direct Club, wow, they're up 5% in pre-market. Did they have earnings? No. But it's up. Smile Direct Club is kind of just coming up on that 200-day right there. But you can see that strong move up on the MACD. Cleveland Cliffs, Upstart, ARKW had a cross up. We already went over that. DocuSign had a cross up, but it's down 1%. This one you ran from 55 to 66 after the golden cross. It's too expensive. Let me see, DocU. I think this is a 30 forward PE. Not crazy. You're in the middle of your range. Year to date 20%, 46% down. We can bring it up. DocU. Josh Brown bought this one. yesterday. I think he uses MACD as well, by the way, on a lot of his technicals, technical purchases. Yeah, I have found BITW, by the way, to be better than BITI. And the reason is this is just Bitcoin. BITW has a bunch of crypto. I mean, look at that chart on BITI versus BITW. It's kind of night and day, but it's an index fund of crypto. Let's see if they describe it on here. Oh, yeah, they don't even have it. So let's go to here. And no. We'll just look that up. I think this is going to be, yeah. Diversified exposure to crypto. 10 crypto index fund can be publicly traded with ticker BITW, yeah. Financial individual investor, I agree. So here's where you can get more kind of information on BITW, but it's got, what does the green one represent? I don't know what blue versus green is, but you can look it up. Bitcoin, there we go. 1 month up 15%, but this is only up 12%. 3 months, this is underperforming again. Year to date, underperforming Bitcoin. Bitwise, 10 large cap. Yeah. BITW is just 10. 10 cryptos. It's nothing crazy. Okay. I'm going to go from brokerage holding. We're going to go to the ARC holdings. Okay, we'll go live there. Guardian Health. I just had a cross up. I don't like that one. Kind bars. Next door. This is next door holding Kind. Next door is far from being kind. A kind place to go. JD has a cross up. I'm going to leave these. Vuzi was one I used to trade. Cat had the cross up. Tower Semiconductor. That's an interesting one, but I mean, it's covered that gap. There's a little gap here between 40 and $40.30. They've had their earnings. So what would make me think that this would continue to slide or go up? Oh, there's the slide. All the way back to 33. That's kind of a crazy move. I don't like that one. Okay. Let's go from ARC. Let's go to the Dow 30. And if I haven't reminded you, get out of out of Boeing at some point in time today. Cat had a cross up. this is kind of, I'm going to dollar cost average my cat. So I'm going to buy a little bit more of that one. I do like that stock. I mean, I'm just going to kind of hold it probably for a year to get into long term. Dow 30. Let's look at the NASDAQ 100, where there'll be 4. Sirius XM. That looks like a button hook, but that's a broken business. I know, that's what I'm worried about, James. Just semiconductors are crazy. I mean, they've just been on a total tear. So, but you saw that stock chart. The stock chart looked interesting, but I decided against it. Let's look at the S&P 100. Lows. EMR. I don't like that one. This one's past its ex-dividend date of February 16th. Yep, you had to hold it yesterday. AT&T. Huh. This is one that, prior to the earnings, I mean, it's retreated all the way from its earnings. So, interesting that it's crossing up here. Let me just look at the energy sector. I think that's an interesting one. I'm going to bring that one up. It's interesting just because I think if we are going through a recession, blah, 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 that one's going to be well under. It's going to be back here at about 15. Energy sector, I don't see anything. Okay, let's go to the strategy tester, and we'll pull up the 4-hour. And I got to start this damn thing because I don't want to be on here. Yeah, SOXL has been crazy good from 10 to 16. I mean, a 60% gain there. You're not crazy for thinking that SOXXS would be the play from a short-term perspective. But you're not even on a weekly basis. You're not even back to your 200-day. I mean, you just hit your 50-day. So if this is a bounce, you can see this one. I mean, we're not quite getting a triple bar because this one's under this one. And remember, triple bars don't have to be in short term. You can get a triple bar in a long term. I don't think you're nuts. I do think you're crazy in that, from a long-term perspective, short-term, I completely agree with you. The buy-in here at $20.86, and you've just kind of hovered. I mean, you haven't made a ton. No. Look. And remember, it's on a 4-hour, and you've only had one red candle today. Or this week. So it doesn't have you out at all. You're just kind of, if you look closely, you can start to see a little bit of a button hook. But this was a button hook right here. This was your high. Your high was 1839. Good year. That was the high back here on February 2nd. So if you bought SOXS on February 2nd, let's see, February 2nd, SOXS had just gotten you out with a loss, but its high was 1981. So there's been some good trades in here, but it's a 4-hour, so SOBR. What is SOBR? Sober safe. Let's see. SOBR. Oh, for toss, man, you come in here with all these ones that don't make money, but I will tell you, it's up 213% year to date. Performance over 1 year, though, you're down 67%. But I think you brought this one up too before. You know about the technology. This is alcohol detection and identity verification. And you can see these guys are buying at $1.10. I mean, they're not buying huge lots, but they're buying at $1.10. You're at $3 right now. And I think you brought this one up before, Offertas. This, I mean, great play. I can't argue with that one. Great trade. You're 358% above your 52-week low, which was 65 cents. Your 52-week high, though, is $9.75. So you only have 69% to get to your 52-week high. James, I would tell you that yes, Tesla's PE is too high. That has been the destruction of every investor, is investing in Tesla based on PE. And I know I abide by it. I know, and I'm the same way as you. Oh my God, it's at 54. No freaking way. But retail has taken this one over. And when I say it's taken it over, this is the by far the number one most traded option. It has eclipsed TQQQ, SQQQ, the Qs. It has eclipsed SPY. SPY used to be the craziest options trading. This one has taken it over. And so I don't know that I'd necessarily buy it. I'm still looking at 150. But John, I would tell you, I'm tempted to buy on that. Anything under 200, I'm tempted to just dip my toes in the water. Yeah, James, I can't argue that this one just trades. I mean, look at that MACD, how high it is. It's coming down. The RSI has quickly fallen from 71 within 1 day to 57. So you've got some selling pressure on it. There have been smarter men than me that have shorted Tesla and have regretted it. So I will tell you, the algorithm, which got you in at 119, still has you in. And the algorithm over 2 years, you make 35% versus losing 4% on just the asset. Yeah, the $85 Tesla, when you cut prices and you spur demand that is back to 2018 levels, you ain't going back to 85. When you increase your capacity, your production capacity significantly, and retool within 2 weeks, you're not going back to 85. Now, the gap that I'm looking at now, James, is between 145 and 152. As long as you're over this 200-day, this is less likely, and this is more likely 254 to 260. So it'll be interesting to see which gap it hits first. If it breaks the 200-day, I mean, the only reason I say it can't get up here is because of this run. I mean, you're up, 100%. In a couple of months. You're way down on it, but these people have made 100% on this run, and it's got to turn over at some time. But you can see, I talk about it. I think I posted this on Instagram yesterday or this morning. The MACD is going down. The strike line is going down, but the price is going up. That's called divergence, and you want to get out in divergence. So. Munger also said BYD is taking Tesla to task in China. So, and I watched a great Wall Street here. Let me see if I have it on YouTube. It is Wall Street Journal. Tesla versus BYD. I'll post this. This is a great video. Let's see. That describes. I'll post this in the chat. I watched this last night. It's a fantastic. If you're interested in BYD versus Tesla, that's a great video to watch. Great video to watch. And listen, whether who's ever right or wrong on Tesla, long term, James, people have been more right than wrong. The people have put in money into it. So I put money into it at the 420 tweet. BYDDY, is that the symbol? Is that the symbol for this one? BYDDY. Let's see. Nothing in here. Is it a foreign stock? It says NASDAQ. BYDD. It's not in Finviz. Let me see. BYDDY stock. BYD company ADR. I don't know why it wouldn't be on Finviz, but yeah, it is. BYDDY. Is it? I just don't see where it's trading. I don't know this Google well enough to know more about BDY. BYD. So and just overview. BYD or BDY, whatever it is, BYD. They sell cheap cars. Tesla is still considered a luxury brand, which is crazy. Yeah, I mean, Tesla's got, I mean, they've got their, the catalyst for Tesla is Analyst Day or Product Day or whatever you want to call it. You got this 50-day that hasn't even crossed up on the 200-day yet. You've got, if we take a look at a weekly, you're just getting above the 200-day. So you're not even above the 50-day yet. But March 1st is their presentation. If you pull back this daily, let's see if I can even look at the $85 gap that I still see. I still see it. I mean, you can still see it here. It's still there. It hasn't covered it. But if he hadn't reduced the prices, you would have hit this $85 gap. Absolutely, 100%. If he didn't spur on demand, I mean, let's be honest. It was a demand problem. It wasn't a capacity problem. So, oh, by the way, I'll bring this up in the podcast, but Applied Materials is the one that Brandon was talking about yesterday that makes the chip components. Amat. Applied Materials is that one. They had a good earnings. Kind of right in line. Nothing crazy. It's up 1.2% in pre-market to 116. Nothing nuts. Nothing crazy at all. But I'm looking in Costco is up. Coke is up. By the way, if you haven't gotten Coke under 60, I think you should buy it under 60. This is a company that, again, I own a bunch of this. I drink a bunch of cola, man. Way too much. But Coke and Pepsi are up. If higher rates are the concern, and again, Walmart is moving up, Pepsi's moving up, your basically staples are moving up. Walmart has their earnings coming up February 17th. Is it today? February 21st. So pre-market. So it's Monday pre-market or Tuesday pre-market. But okay, let me start the podcast now. And Brandon, it was Amat. Amat. I'll bring it up on the podcast too because they had good earnings. By the way, Amat pointed out yesterday, I do have in my notes, there was one line in their earnings that they pointed to a $250 million write-down because of a cybersecurity event, which I thought was interesting. Okay, let me... Good morning. It's Friday, February 17th, and I'm recording the podcast. Let's start by taking a look at SPY. I mentioned yesterday that on the 4-hour algorithm, we hadn't had a red candle. Well, we had a red candle yesterday in the afternoon. We opened the afternoon candle, which is at from 12:30 to 4. We opened at 4:11. We closed at 4:08. Right now, you're at 4:05. You're down slightly. In the pre-market, we're just opening up. It's 9:30. I'm recording this one late. So we're just opening up. My question to myself yesterday as I watched the market was, I know I have been saying for weeks that February 15th was going to be the crash of the market. Maybe I was a day early. Maybe we're looking at the turnover here. Again, in this algorithm, it's 4-hour algorithm. This is TrendSpider. The buy-in here is at 388, and you've ridden this all the way up. And I talk about these button hooks all the time. You can see back here in August, the button hook. And on the bottom, you can see the button hook up. We saw a button hook here February 2nd, where our high was 418. We've come all the way back down to 405. And you're seeing that button hook, that 9-day is moving down. The 21-day is moving down. The 50-day, we're just above it. If we go in to look at a daily on SPY, you can see the button hook is happening. We're starting to get this little breakdown. You had this golden cross on February 2nd. We talked about this. And we should start to move up. But there has been just economic data after data point that just points to the Fed basically staying higher for longer. And you can look at the Qs. The Qs is the other one that I typically look at. And it's kind of got the same kind of pattern as SPY. You're going up, but you're seeing this button hook. And here on the algorithm, the MACD is crossing down. The RSI is at 48. I think we're just moving down. And I don't think that I think on SPY, we're probably looking at a support level at 400, whereas you're at 406 right now. I think you're looking at the support level. The first support level is right at this 50-day where you're right at now. But I do think 400 is probably a pretty good support level here. Just looking at the straight through the chart, you're seeing this pop up to 400. You're seeing this pop up to 400. You're seeing this second pop up to 400. And then you're just seeing a slide down here. So I do think that we're looking at a floor of 400 specifically because of this large downturn in the RSI. You'll see some people coming back. We talked about yesterday, and I was on YouTube Live a little bit, and there was a question from Brittany, Brandon, who asked, hey, what's the company that makes the semiconductor equipment that they use to make the semiconductors? This is Applied Materials, AMAT, and they had earnings yesterday. Great earnings, solid. They're up 0.5%, nothing crazy. Their ex-dividend date is coming up February 22nd. We can look at Amat here. Applied Materials, their dividend is less than 1%, so it's not crazy. Year to date, they're up 18%. Over 1 year, they're down 18%. So it's right in line. You're 19% away from your 52-week high. You're 62% above your 52-week low of 71. That 71 came during the October lows. So Amat is that symbol. Another one that announced earnings yesterday that I saw was Dash. They beat huge. They were up in pre-market over 75, I believe. It was up enormous. They moved up 15, 20%. They opened up just slightly up. Let's see. Yesterday's close was at 66.89. They're at 67.04. So it's come all the way back down. Just, again, higher rates for longer. That's what you're looking at with all of the data point. I wanted to point out yesterday I got a message on Instagram about Vail. I think 2 or 3 people wrote back, yes, Vail, yes, Vail. Again, I want to bring it out. 1705 is the cross up here. Now you had your earnings, pretty okay, 82 cents share. I haven't read too much about it. Vail is one that it has a low PE because it's a materials company. It's got an 8.59% dividend. I don't know when the next dividend is, but it's 8.59%. So, you have this golden cross. Most likely your downside is down here at 1585 at the 200-day. I wouldn't expect it to go significantly below that. This is a materials company that most of the EV companies are using to get their materials. So it's a solid play in the EV space. So Deere, they had their earnings. They were solid this morning. It has had a pretty solid pullback of late. You can see this December, we had a buy in here. It lost. In January, we had a buy. It kind of went up, then it lost its way. You wound up losing. We had another buy in January. It kind of found its way, lost its way. You had another loss. It just got you out with a loss today of 1%. It is up 5% in the pre-market at 422. You're using this 200-day at 406 as your support level. If you pull back below that 200-day, this one just doesn't spend a lot of time below that 200-day historically. And you can see back here in the June to July basically it just got trampled down to 283. And then it just shot back up. This is a clear play. I mean, they have self-driving tractors. This is the Tesla of farming. That's essentially what Deere is. I want to bring up Boyle. I know I said, hey, under 5, you should buy Boyle. It's just continued to sink. Natural gas is at its lowest price since last December. So Boyle still, and I constantly say this, it just doesn't have the confirmation. I think 5 may be your buy point, but right now there is no confirmation. I thought there was a little gap up here. The algorithm, the 4-hour algorithm, has nothing as far as a buy right now. If we run our day trading algorithm, which again is a 65-minute candle, and it uses the 8-day EMA, when you're over the 8-day, you buy. When you're under the 8-day, you sell. This still has nothing even on the day trade one. So I would be completely careful of Boyle. KOLD, on the other hand, has all the momentum that you could want. KOLD is up 7%. Right now. This one has just moved incredibly well against this particular, let's see, KOLD. Oh, this is on the, okay. We'll look at the 4-hour because, the day trading one, KOLD is just way too, its RSI is at 62. It's crossing up, but you can see from this 4-hour, I mean, we had to buy it December 19th at $17. You've had staircase up the entire way. So if you bought at $17, I mean, what, 3, 4, 5 times your money? That's crazy. So I wanted to bring up 5 stocks because Stephanie Link this morning brought up 5 stocks that she thinks you can hold for a good long term. Nike is one. Nike, we had a buy-in here at 125. Their ex-dividend date is coming up March 3rd. They have moved direct to consumer, she said. China reopening. While you have had a good move in the stock of recent, and you've got these gaps here. The first gap is between 103 and 113, which hasn't been filled. I don't know that I'd necessarily get into this one at this point in time. I would probably wait closer to 100. But when you look at the weekly on this one, the 50-day, the death cross just happened. So I do think that you probably have 100 in this. But if you get back closer to 100, if you wear Nike clothes, buy Nike. I don't particularly wear Nike. Their shoes are too thin. I think their materials are crap. I particularly use Under Armour, but that's me. One that I told my dad to get out of at 80, and it's just run, is Starbucks. It's up 14% in the last year versus, remember, SPY is down. China reopening, 33% of the stores that Starbucks has are in China. So China reopening is huge. You've got this gap here between 101 and 102. I again say wait until this one comes down towards 101. But at 107, I mean, are you crazy buying this one? Nah. A year from now, as long as China reopens, things are going fine. Starbucks introduces some, I think there was an announcement that they're going to do some food or something like that. I think you'll be fine. But Starbucks, she has bought and hold. She likes it. DHI, which is DR Horton, which is a home builder. This is up 16% in 1 year. The U.S. is short on homes. And so home builders might be a good way to play that. You can see in the past year, DR Horton is up 16%. You've got this gap here between 76 and 79. I just can't see it coming back down to those levels, not with the housing market that we have. If we go into a deep recession, maybe you see it coming back down there. But even higher interest rates haven't turned off home buyers. So I can't see that one going down. The favorite one that I have of hers, the earnings are coming up, and it's Target. And I've said Target all the way to buy this one. You have a gap back here, and it's way back. It is back to May 17th of last year, where they announced, hey, our inventory suck. You went from 212 down to 169. You've covered the bottom portion of that gap. You went all the way down to 140 in December of just this year. Well, if you bought at 140, kudos and high fives. I know some people bought up here at 165, and they were saying, God, I went down to 140. Well, if you bought here at 165, buy more. I believe in this company. From the long-term standpoint, this is a good company. Their inventories got them into trouble. If they come out next week, and their earnings are on February 27th, if they come out with their earnings and they say, you know what, our inventories are in line, I think you look at this gap getting covered. Again, I think the consumer's in decent shape. The problem that you're going to have is if we go into a recession, this one might get pulled down. But I like this stock. I personally hold this stock. I think my average purchase price is around 111. And that was the last time I checked. So let's go over some of our recap, because Fridays we just kind of recap. Oh, by the way, if you are in Boeing for the weekly stock pick, we ironically, I think it was one of our insiders. He had texted me, I think on Wednesday, and he said, hey, get out of Boeing, blah, blah, blah. There's just an inventory problem. But I own one share. I bought one share with the weekly stock pick. You are way down today, 1.46% at 209. I think my entry point was 215. So I've lost all of $5. Not crazy, nothing nuts. But again, 209 is where you are at today. Today would be your day to get out of Boeing. So I'm probably going to hold that one share. to be honest with you. I'm still holding CAT. I'm not, I don't abide by kind of you have to buy and sell on these. He tracks his performance based on that. And if you want to track his performance along with him, you can do that as well. But recap, Kraft Heinz was Monday. This was one, let's see, we had a cross up here on February 13th on Monday at 39.82. You're trading right there. You could have gotten out at the high again on Wednesday at about $40, which is, not a huge gain. But that's one, in my mind, I think you buy and hold that one. Right through earnings, they didn't have great earnings. They were good, right in line. The MACD's still crossing up. You got your ex-dividend date coming up. XEL, we talked about Xcel Energy. This one had a cross up, and it was at 68.47. Got you out yesterday with a 1% loss. I don't know that I'd necessarily, again, you're holding on to this 200-day, which is a negative trend. The 50 days moving negatively. I had brought up this gap here between 65 and 66. Might want to be careful about it. Kind of, again, you're past your earnings, but XEL. Altria Group we brought up. This is the smokers. I'm not a fan morally of this one, but 40. It was a secondary cross up here that happened on February 13th. Right back here, you were selling at about 47. It looks like you're trading right at 47. Nothing crazy this week. Again, if you looked at it from this week, then you're doing fine. Par. This was a secondary cross up, and if we look at February 13th, we were selling at 28.14. You're at 26.46. Nothing crazy. Again, it moved down a little bit. CLMT, which is Calmet Products. I think I saw something on this one that this was going to move like big. You go back to February 13th. We were selling at 17.21. You're at 19.32, almost 10%. CLMT. Tuesday, we looked at MPLX. This is one that I just buy and hold for the dividend. This had a buy-in at 34.58. You're at 34.77, up a little bit. Went all the way up to 35.37. Nothing crazy. But this is one that has a 9% dividend that I bought and held. mRNA, they announced that yesterday, they announced that their flu vaccine was not as effective. I said, hey, this 168, I'd probably be a little bit concerned just because I wanted to see that the 200-day was holding. We saw that button hook. I thought it was good. You got up to 176 at the high. Today, you're trading at 162. The algorithm has not gotten you out. It will probably today get you out of this one. Their earnings are coming up on February 22nd. Expect some type of hype play. On Tuesday, CHRD Cord Energy crossed up. This was one that crossed up at 139. It got you out a couple days later with a 1% gain. You've just crashed and burned. It is down at 129. It traded down to 128 today. Their earnings are coming up next week. We talked about this one. They had a bunch of special dividends last year. Special dividends. If they do another dividend, then you can expect to see this pop. Probably up to, I would say, this was the special dividend that they announced in June, 177. I would expect to see them on a special dividend pop to probably around 150, between 140 and 150. But again, you're rolling the dice on that one. The RSI is down at 31. The MACD is kind of crossing down. You just don't have a lot of confirmation on this one. So I would worry a little bit. Let's see what happened. Did CHRD report or something? Analyst estimates California to report decline in earnings. That's what's happening. So they're expecting a decline in earnings. It's going to be hard for energy to grow year over year with all of the gas prices essentially coming down and stuff. UDOW had a cross up. This is the up Dow triple levered ETF. This had a cross up at 61. The next few days, I think you're still in this one, it looks like. You're trading at 58, but this is a triple levered Dow. I said, you're in this ascending triangle. You're down at the low of it. Looks like you traded to about 61.11. So it didn't work very well. This one just doesn't, again, when you're at these high kind of levels and you have that gap, that's in the 200-day below, it's just not one. I think I said that. Fastly, I said this was a great one. I thought this was a great opportunity. It is one of those high flyers that essentially I said it's a software company. I think you could do this. I would be scared of this gap. But it crossed up here at $12.45. You're at $15.56. Great trade if you took it. Again, it's a software company. They are probably turning profitable at some point this year, but that was a difficult one. McDonald's. This one's not going to hurt you wherever you buy it, really. 266.65 was the buy-in. 267.56 is where you're trading. That's more of a long-term play. Honeywell, we brought up. This one had a cross-up, but I had said, hey, it's trade the trend, and we just haven't done well of late. The 200-day could provide you a support level. The buy-in was 198.77. You're looking at 199 trading right now. So it's not great. Lulu, I had said, hey, we got to cross up. I like this at 300. I've said this many times. 313.64 was the cross up. You're at 316 right now. You went all the way up to 320. So not a huge gain, but I do like this one under 300. Buy it under 300, sell it when it gets over 300. That's where I like this one. Oracle, we brought up that Josh Brown bought this one, that they have struck a deal with Uber. The cross up was at 89. You're at 86 today. I think the hype may be coming into this one. Their earnings are coming up March 9th. The RSI is quickly moving down while the share price is kind of stabilizing. I would say you're probably fine in this one. They buy and sell. They retire their stock faster than any other stock other than Apple, I believe. It's a 1.46% dividend, slightly high PE at 27, but forward PE is only 15. You're only 4% from your 52-week high, and that's where I said your problem is going to be. Crossing that 52-week high is going to be difficult. So you're kind of topped out on your top. I would buy it on the way down. I believe I brought that up, but I do like it. It's one of my favorite ones. I don't personally own it, but I have traded it in the past. Duke Energy we brought up. This was a $99 price point. I was concerned about it holding the 200-day and the 200-day being negative. Their ex-dividend date was yesterday, so you're out of your dividend. It's trading at 98.42. It kind of dropped down. It lost its dividend. So the 99.99, if you held on for a week, it did get you out today with a 1.7% reduction or loss, but Duke Energy has a 4% dividend, so quarterly dividend, you probably made it back anyway. So Wednesday, we talked about Taiwan Semi crossing up TSM. This was a secondary cross up. I said, hey, I don't believe that this cross up is good. I think you have more downside. Warren Buffett got out of this one. Their ex-dividend is later in March 16th, it looks like. I think you just have more downside. I think you come down to the 78 level on this one. I think you actually fill this gap between 84 and 81, which was created on their earnings, strong earnings. Look at the RSI is at 36. I think you come down either to this volume level, which is 81, and you cover that gap, or you come down to the 200-day at 77. But I think this one you could sit and wait. That was a secondary cross up. I said just be careful of it. Snowflake has a secondary cross up, I believe. They have taken a huge turn down. The buy-in was 135 here on January 11th, but this one has the button hook, and we talked about it on Wednesday. I didn't know whether to believe this run or not. I said the 200 days at 153. I said that's probably more of where I need to add more on this. I think my average purchase price is down to about 180. But I like the stock. I really like the stock. NXE, Next Gen Energy. We talked about this one being in an ascending triangle. Energy's just gotten killed, though. The buy-in was 469 here. Doesn't look like it's gotten you out, but it probably will today. Energy's just getting killed. I mean, honest to God, if we go into a recession, energy's going to get just destroyed, like it did late last year. PDD, which is PDD Holdings. This one had a buy-in at 93.78. You're up at 94. Nothing horrible. Their earnings are coming up later in March. We talked about that one. We talked about JP Morgan. I said this one is just a little bit too expensive to buy up here. I think you buy closer to the 200-day. I think there's no real gaps to cover other than this one at 112. You might come down that way. They're talking about JP Morgan. There's a lawsuit against them for conspiring with Epstein and hiding his money and his antics. That could get ugly for senior executives. Datadog, they had their earnings and they popped on earnings. This was a secondary cross-up. I said, be careful of this one. They made 26% per share. They are not making money. This is one of these stocks that is probably, forward PE of 71. Super, super expensive. No dividend. You're 52% below your 52-week high of 172. You're up 10% year to date. But I do think that you pull back on this one. You can see right after their earnings, they just popped on volume. One that I liked was Nine Energy. Let's see how this one wound up. Nine Energy on, Thursday. It got you out in the afternoon candle. So it said buy at 1071, got you out with a 3% loss in the afternoon, got you right back in. Today it's trading at 993. I like this one because it crossed up low. It looked like it was going to start to take off. The RSI has just kind of sat there. I would probably be out of this one. Their earnings are coming up on March 7th. Honestly, that $10, I would probably get out at $9.91 here and wait till next week. Just assuming that you're in, get out. We won't talk about yesterday's scans because it's only one day, and yesterday was a down day. One that is up, I think, in the pre-market. Now it's down 2%, but QCLN got you in yesterday. You're seeing that button hook. You're seeing a lot of these button hooks just kind of going down. We had a great January, and we had a great beginning to February. So you're just seeing it pull back. Cross-ups today, ones that I think you could probably get into. Cleveland Cliffs. Cleveland Cliffs had a buy-in at $20.88 yesterday. Today it's down at $19.92. I say probably $19.28. If you hit that gap, I think you could get into this one. There's this gap down here at 15.37 to about 15.80. If you get in at 19, I would say have your stop loss probably close to about 18.50. Because if you break that 1850 volume shelf at about 1880, 1890, you can go down to 1762 if you want to hold it there. But I would say sell that one because I think the volume shelf that's down here would be the next hit. You can clearly see the volume shelf up here is pretty large. So under 20, I think you buy this one. Over 20, I think you sell it. But you absolutely could hold that one for a long time. I went over on YouTube yesterday. Zephan asked me, hey, remember that Cleveland Cliffs video that you posted from like 6 months ago? I said, yeah. He's like, yeah. He bought in and wound up, selling a little early. And I looked at the chart. Anything over 20, you should sell. Anything under 20, you can hold it. Might be a long time, but it'll get back to 20. Again, if we're not going into a recession, that's the key. Materials companies, if we're going into a recession, will go down. But Cleveland Cliffs in particular, we have an infrastructure build, and you have cars that are going up. So the iron ore is going to increase, and that's the only company that does it. So Cleveland Cliffs. Albemarle had a cross up here at 286.30. You're trading at 257. The algorithm's just going to get you out. I mean, it just crossed up. You can see the MACD right here. Crossed up, just immediately crossed down. And your RSI is down. This one's just getting killed. Not based on earnings, not based on anything other than it has run since 214. This is the materials company that does lithium, I believe. But ALB, TARK, which is the 2 times ARC innovation. It had a cross up, and I'm going over this one because 75.85. If you were trading on a bot at 75.85 would have triggered. You're down at $69 right now. This is why I tell people don't trade on a bot, on an algorithm. This algorithm works because over the past 2 years, you would have lost 47% if you would have just held this one. The buy-in and buy-out loses you 27%. Your average win is 35% on this. You just got out with a 66% gain, but wow, you could have gotten out way earlier. So TARK, this is 2 times the ARK-K Innovation Fund. SDOW had a cross-up, which is the short Dow 30. This had a cross-up at 25.12. You're trading at 25.98. If you believe that we're going into a recession and you're looking at more downside on the Dow, this gap will get filled. There is still 28.41 to 28.49 filled in this gap. Left in this gap, I should say. So that would be a nice 10% move, but that would mean that we would be going down about 3 or 4% on the Dow. So DraftKings had a cross up. I have been out of this. I wrote the loss off in December. I can get back in. I have not gotten back in. They posted crazy good earnings. The buy was $11.33. I think that's about where I sold it at. It's up at $20 right now. So you have doubled your money in 1 month, just over 1 month. They had good earnings. They lost 53 cents a share. It's still costing them a ton of money. It's probably a $40 stock again with kind of the results. I would remember, they don't have Super Bowl in those results. They probably announced something about Super Bowl betting, but they don't have the financial. I don't think that they had Super Bowl in those results. BITW, which is a Bitwise 10 fund crypto, had a cross up at $9.70. It's crossing down. It's down from there at $9.56. This just got you out from a December buy of $5.60. And it got you out with a 75% gain. So if you believe that crypto is going to continue to run, which would be hard in the higher inflation times, but this MACD is crossing up when it's right on the oscillator. The RSI is a little high at 59. It's coming off an RSI of 32. Might be a little bit. If you want to day trade this one and we were to look at the 65-minute algorithm, because I think that one is probably a better one for BITW. Here is 5 years. 5 years on the 65-minute candle. And remember, this is just buy when it crosses the 8-day EMA and sell when it crosses under. It's as simple as that. You would be in this one at 8.49 and you're at 9.54. You do have a little gap down here at 871, so I would probably think that that might be covered here on a 65-minute candle. But your average win is 5.98%. Now, if I test this one down to, say, 1,000 candles, and I think that was 6 months, we said, for 1,000 candles, somewhere in that neighborhood, maybe a year or 2 years. No, it's not 2 years, but maybe it was a year. You win 32%. Versus a 20% loss on the asset. So it's an interesting trade. Again, that's an interesting day trade strategy. So BITW is the one that I think had a cross up here. But again, you're lower than the cross up. 970 is the cross up. 954 is where you're trading. BABA. I am ready to trade BABA again. I sold off mine in December for a loss. I believe it was around the $90 point. We had a $103 price cross up here, $103.14. You're trading at $148. I would say you get down to the 200-day and cover this gap that goes down to about 91, 92. I would say wait for the 90s and start buying BABA. Again, the opportunity in China is bigger than here. February 22nd is their earnings. ARKK had a cross up, and I think this is a secondary cross up here. Nope. It's an initial cross up at 43. You're trading at 41. I do think that you come down to the 200-day, which is 36. I would probably wait for this one. Again, don't buy on a Friday unless you're crazy. Sure that you want to get into RK. Put a tenth of your money in. So if you have $1,000 and you want to put $1,000 in, put $100 into RK today. I just think you'll have a better opportunity to buy a little lower. DocuSign, super expensive. Josh Brown bought into it yesterday. This is a secondary cross-up. Your initial cross-up was at 57.87. Secondary cross-up happened yesterday, and you can see it, but it's probably crossing down. The 9-day has to cross under. I think Josh Brown uses a MACD strategy on a lot of his technical buys. One that is 2 weeks ago, the daily stock picks pick, Caterpillar. I bought where you see this gap at about 258, 261. I bought up there somewhere. It's at 246.50 from yesterday. I do think that the MACD is low enough. I think the RSI is low enough. I think you can add to this. This gap down here at 206 to 200, I think that's in play again if we go into a significant recession. But Caterpillar's a good stock, and it's got a ton of international exposure. One that had a cross-up that, again, is interesting is AT&T, 1923. You're trading at 1927. It has a cross-up under here. There's no real catalyst that's coming up for this one. Nothing that's crazy, but your 200-day is starting to turn positive. So this is one, if we went to a weekly on this one, it's just been a dying stock for years. And you've been able to trade, like here in 2019, where you traded December 2018, where you're trading at about $20. And then by December 2019, it's at $30. You got a, 5-6% dividend during that time, plus you enjoyed a 30% increase. Now, by the time COVID came around, it died. And it's just been bad business decision after bad business decision. Down here in October at the lows, you were at 14. You're at 19 today. I think you may come back to the 200-day, which is at about 22 long term. I don't think AT&T is a good trade short term, but long term, I do think this is a decent one to come back to the 200-day. They have new management. I think they're managing it better. They have a 5.7% dividend. Now, over 1 year, you've made 6% in this stock. Year to date, you're up 4%. So you've made 6% while getting a 6% dividend. Not bad. Again, versus SPY, which has paid you a 1% dividend and is down 9%. So AT&T, don't write it off. I wouldn't buy and hold this one long term. If you hit 22 by the end of the year, I would probably just get the hell out of this one. But buying at 19, I don't think it's a horrible decision. I think 14 is probably your absolute bottom. So I'll keep it a little short. I'll stay on YouTube a little bit longer, but we are closed Monday, so I may do, and I might, listen, Hung, my apologies. If you're listening, I haven't done the fire. I promised you that I would try and do it last weekend. It was Super Bowl weekend, Hung. So this weekend I may do it. Or was it Super Bowl weekend last week? I think it was Super Bowl weekend, yeah. It was Super Bowl weekend last week. So this weekend, I'll have a 3-day weekend. I'll probably try and do a fire episode for you. If you made it this far, rate me on the whichever platform you're on. Just hit 5 stars. You can leave a review if you want, but hit 5 stars. If you are on YouTube, just make sure that you hit the thumbs up and make sure you subscribe. I'd appreciate a subscription. So that I know who's watching. If I did start a Substack, so if you go into the link tree, you can subscribe to the Substack. It is basically right now just the podcast episode, but I will probably post a chart, at least a chart a day on Substack. which will get emailed out to you guys, or you can go and look. But if you have any questions, definite 52. Man, this one has just tanked. Energy today is just energy and materials. Everything's down. Let's see. Yeah. Energy. Oh, God. This core portfolio. Moderna's down 6%. Cleveland Cliffs down 3%. Devon down 6%. Again, after yesterday's horrible. Microsoft's down 1%. Microsoft, if you get it in the 240s, buy it. Buy it all day long. NVIDIA's down 2%. I would expect NVIDIA to be down more with its run. Qualcomm is down 1%, below 130. Snowflake is down 5%. And I'm just looking at the core portfolio. Exxon is down 3%. So everything kind of in the portfolio is getting killed. Walmart's up. United Health is at 492. Hopefully you guys bought more at 485 like I did. We had this buy-in here at February 9th at 485.63. I bought back here at when it was here at 484 January. I bought more down here. I haven't sold it. I think 500 is your pivot point on this one. And I think United Healthcare will just pop on the next earnings. It's a well-run company. So if you have any questions, hit me up. Have a great 3-day weekend. Enjoy yourselves. Okay. Export song to disk. Export. Yeah. PXD just has that crazy good dividend. Here's the thing. If we're going into a recession, energy is going to get killed. Energy is going to get absolutely destroyed. But, let's see. Let's look at PXD. I like the PXD dividend is just, yeah, look at that chart. Got you out. Got you in February 9th. Got you out. I got to write some scripts to tell people when to get out. But this one's good. And if you're looking at a 65-minute time frame, let's look at PXD on a 65-minute. If you're looking for when to get in, let's see if we see. I think we're going to see some type of comeback in the afternoon today. Wow, look at that 65-minute candle. This is a 2.3% move on a major energy stock. Wow. And that's just from 9:30 until now. Should start the next candle here. Nope, 10:35. But that's a crazy. Look at that move since what? February 15th. That was Wednesday. Wednesday at 10:30. Look at that move. Whew. Yeah, and that's it. I mean, Christian, you hit it right on the head. Right on the head. Once we start refilling that thing, I mean, the administration better hope we don't have a pipeline go down, a hurricane that comes by, some type of terrorism that happens. But yeah, look, I mean, if you want to see the chart, it's the same chart in Devon. Look at that. I mean, ever since their earnings came out, just look at that slide. And I'm still holding. Still holding. I don't think energy is a bad play. I think, if I want to see Boyle, look at Boyle on the 65-minute chart. I mean, Boyle is down at what? $5.20. You can see why I said $6. I mean, this range right here. Oh, no, I don't want that. Well, we're going to put this in. Look at that range. So that's from $6.76 down to $5.64. And that goes all the way back to February 6th. Now, you broke the downtrend. You didn't break the uptrend. And look at how many people are selling. Look at that volume spike. I mean, that's just day trading 101. I slightly disagree with James. I wouldn't take it off your list because the volatility you're fine with. I mean, on a 65-minute candle, you got 1.5% on this one move. You're at 3% on this one, February 16th at 12:45 yesterday. 2%. I mean, you're looking at good percentage moves on these. Yeah, well, Elon Musk, everybody knows it's not going anywhere. But if we look at WTI crude, let's see, do I have WTI crude? We can look at, you know what? Let's just look at XLE because we'll just look at the energy sector overall. And we'll look at a weekly chart. So here is your energy sector overall. You can see, I mean, it does play on dividends, but if I'm drawing a trend line, I'm looking at 1, 2, going right about there, and that's your top. And so this is just XLE. You're in this upward trend. Now, if I took it back to COVID down here, where oil went negative in March, it'd be even a straighter line. But I think that pulls us all the way back to 2015. And I think that trend right there. So you're looking at, right now you're at 84 on XLE. The bottom is at 72. The top is at 103. So you're right in the middle. So I don't think it's a bad time to add to stuff. I think, Sherry, I've been saying 4 to 2. You could day trade it. But I'm not sitting in front of my computer all day trading. We'll go to a weekly on Boyle. And because I still think I have this. Is it monthly? No, I guess I don't have the chart up, but maybe I took it off. We'll just go weekly. So if you look at this weekly and we go back, and remember it's a decaying asset. And so we're going to take the bottom portion. We're going to connect 3. And I'll go back here and we'll connect 3. There's 3 connected. And then we'll just go up top and we'll see. There we connected 3. And you can see down here, you're right, $4. If you continue down, the bottom here is $2.88. So it depends on how long it takes to get down to that level. But it's a decaying asset, so I don't think you're wrong. I don't think you're wrong at all. Now, mind you, the algorithm here, on a 4-hour, it loses you 40% versus losing 98% of the asset over 7,000 candles. That's for the 65-minute. If you go to the 4-hour algorithm and you look at the 4-hour algorithm, this loses you 51% versus losing 78% on the asset. So both algorithms outperform the asset. But the reason is the asset's a decaying asset. So there's nothing that you can do that's going to actually, KOLD, great example. I think KOLD, look at the move in KOLD. The algorithm, the 4-hour algorithm on KOLD loses you 77%. Wow. KOLD, you win 30%. No, I'm sorry. You win 23% of the time. But your average win is 54%. And that's just over 2 years. So, boy, it will be a little bit crazy. I'm going to move you over to Active Trader Pro. Oh, your GLYC. Hopefully you got out of this one, James. You and Zephin. Oh, it hasn't freaking moved. Hold on. Oh, it has updated. Your SOXS, you're up 3% today. I think you're doing well there, hopefully. Browse, upload this, upload, we'll do a transition. That one, swapping tubes. We'll put that in. I think a lot of people listen to the podcast and then just leave. Since they know I just sit here and screw off. I do like some of the opportunities that are being presented, but I just don't think that we're done going down. That's my take on this market. Is I just don't think we're done going down. John, that Tesla buy, if you're still here, John, I don't think you're bad on that one. I think under 200, I mean, we've seen under 200, it's popped. Where are we now? Let's see. It is at 203. Tesla's up on the day. Again, anybody buying those short Tesla ETFs, I would caution just because. I mean, Tesla's not even that shorted anymore. I see on this Active Trader Pro only 3% of the shares are shorted. I don't know what my dogs are doing. Let's see. Okay, I got plenty. Anchor. Bum 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 bum. We're going to notes. I need to bring up my Webull account as well. on Nike, DHI, Target, Amat, Dash, Vail, Deer, Boyle. T, Doc U, ARKK, TRK, DKNG, CLF. Okay. Bum bum bum. Bum 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 bum. 2. I don't know what's going on over in my dog bed. These two are going nuts. SPY, QQQ. I put those into. Now let's copy. Publish now. Bum 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 bum. Okay, we're going to NUS Carvana. We're gonna get rid of all that. Deer. And then Nike, Starbucks. We'll keep SPY out of there because we already have it. And we'll take these. X tweet. Don't like that Anchor does this, but tweet. Bum 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 bum. We're going to X tweet and then close that. Twitter again. Have a great weekend, Sherry. Thank you again. My housekeeper says thank you. I thank you. And yeah, everybody leaves because they know exactly what what I do is just ignore crap. I don't know how these guys on live stay so engaged. Tweet, and then we're going to go and I'm going to tweet and just put in. I should have done a good analysis of Tesla. But maybe I'll save that. SPY. No. We'll do SPY, QQQ, TQQQ, SQQQ, Tesla, SPRC, BBBY, HYG. No, I don't even know what those are. I have to look those up. But the quick answer is no, Christian. UVIXI is up. Mara is up. ARQQ is down way down. What is ARQQ? I have to look that up. Okay, let me see something. Before I switch you back, I want to see episodes. Why does it do that? Go to analytics. Wow. I don't know why, but episode rankings. Huh. Oh, so yeah. Let me bring you back. So when I talk, I'll bring you back to Safari. So for instance, this over here, why am I not seeing you? Okay. Live. There we go. Okay, there's a delay. But if you look over here on the left-hand side, there's a book on FinViz, book value per share. That I've been told, and again, I'm not a huge expert, but this book value per share at 307, if a bank is under book value, absolutely 100% buy it. Because some other bank will buy it at book value if it's trading under book value. So if we just look at the screener, can I look at a screener? Let's see. And we're going to go to all. And we're going to say, can I look at valuation? Can I do this book value? Fundamental. I guess I can't look at book value. technical. No, that's going to be technical. I don't want that. Exchange market cap. PB, price to book ratio. So we can say I want everything with lower than 1 that trades on the NYSE. And I still have let's see, under 1. I still have 609. And let's see, price to earnings profitable. Still have 399. Price, let's say, $174. And I want to say S&P 500. There you go. You've got Capital One Financial, COF. So let's go to FinViz, and I'm going to click on COF because I want to keep those results. So Capital One Financial, which is big, their book value per share is 120. They're trading at 110. Their PE is 6. Which is, they have a 2.15% dividend. Year to date, they're still up 19%. Let's look at COF here. Look at COF. It just got you out with a 25% gain from 90 to February 16th, right there. If we look at the 65-minute, and we run this, I think you're still going to be out. There's not a lot of stocks that you're buying today, by the way, with this downward move. Although Cleveland Cliffs is up over 20 again. Yeah, you're out, but you're just kind of hovering around that 200-day. So COF is one. General Motors. If we look at General Motors. Now, here's the thing. General Motors has gone bankrupt more than any other auto company. Their book value is $47.91. And they're trading at 42. And if we go back over here to TrendSpider, General Motors, on the 65-minute, you're out, I bet. Because you're down 1% today. Yeah, you're out with a 2% gain. Let's run it on the 4-hour. If we look at GM, you're still in with this 37.92, and you're trading at 42. So, let's see. FRST. This is Primus Financial. Book value is 15. It's trading at 11. Earnings per share this year 106%. Year to date, it's up 0.84. Upgrade Piper Sandler to $14. So you're looking at 10% gain to up there. There's the transcript. It's all PR Newswire. Everybody's buying at 12. They're buying at 12 and 13. It's not huge buys. This guy bought, the president and CEO bought $350,000 worth at $13.79. Yeah, with rising interest rates, this one makes sense that it would go up. I just don't know why it's going down. I mean, they're only 2% above their 52-week low of 1161. You got a 3.36% dividend. When's their earnings coming up? FRST. I think it's a great find. You may know something, and here's where myself, you, and everybody else in the world differs from Buffett. Buffett will pick up the phone and call a CEO. That's it. TON. Let me see. STEM. That's the, I think that was in the ARK fund. Don't they? Let's look at STEM. TechMUS. They're not making money. Initiate coverage, $11 share price. You're trading at about 8. Fourth quarter results they announced today. Here is STEM. They announced their results this morning or yesterday. Disappointing. I would probably look at, TON. My question would be, why are all these insiders selling? Why did the director sell $2 million worth of shares in November at 13? Unless they knew something. I mean, this is all the way from August where it's up at 15. They're not making money. Their price to sales is 6 when it's trading at 17, which just means when you're trading up here at 15 and 14, it's just too expensive. Their earnings per share this year expected to grow 59, then 28%. Your target price, your average, this is your mean target price, is $17, but nobody's covered it significantly. That's always bad. This is what happens to stocks with massive short interest, unfortunately. The good thing is those shorts have to cover at some point, and given the landscape. So it might have been in a short squeeze. Let me look at STEM. Short interest is 15%. You have 21 million shares shorted. Yeah, 15%. So, TON, I would tell you, it's not going up based on any fundamental thing. It's going down based on just shorts being able to find people to sell them shares. That's essentially what it is. So, Tana, hopefully I answered your question. I don't know that I trust this one to go back. I mean, it's down 16% today. I do say any reaction in the market is an overreaction, but I haven't read these results. Let's see what they say here. Oh, they don't even. Page you're looking for isn't there. Business Wire. Let's see what Business Wire says. Up from 53 million and sequentially up 56%. Margin of 8%. Ugh. They're only making 8% margin. Gross margin of 11%. This is a technology company making 11% margin. $10 million loss versus $12 million in Q4. Ended Q4 2020 with $250 million in cash and cash equivalents. Record revenue, GAAP margin of 9%, which is only up 1% from 2 years ago. So it's a solar monitoring company. Let me look. Operates digitally connected and intelligent energy storage network provider in the United States and internationally. Yeah. I wouldn't be in this ton, but if you want to take a chance, I wouldn't talk you out of it. I'm a big fan of solar stocks. The problem that you have is I don't think that they have a lot of cash on hand. So you could be looking at this going to zero. It just doesn't sound like they have a ton of cash. And so I would be worried about this one actually going to zero. Yeah, and Christian, as far as book value for cannabis stocks, let's look at what's a good cannabis stock. Yeah, exactly. Only 3 people are watching. Instead, it's 15 though. I think we top out about 30 people. Ton, that's awesome. If I saved you money, tip me. I'm kidding. Don't tip me. Ton, it helps to kind of look at, Fin. I know I sell, I kind of hype TrendSpider as far as this stuff goes. And I tell you, if you're trading a lot, then you should absolutely get TrendSpider because there's no better tool in the business in my mind than TrendSpider for that. If you're trading just a little, use FinViz, man. FinViz is the greatest freaking thing. CHD for Brian. Book value is 15. Church and Dwight. This is... that PE of 49 on a consumer defensive household product when they're only growing at 6%. And Citigroup initiated coverage with an $85 price target. They initiated coverage on February 17th with an $85 price target and is trading at 82. Brian, you're fired. Let's look at insider sales. There's nothing. I think this makes Arm & Hammer and stuff, if I'm not mistaken. It's not a horrible company. Let's look at long-term. CHD. You got an ascending triangle here. You buy in at 81.91 back here on February 3rd. If I just look at a weekly of this one, does it have a dividend? 1.32% dividend. So you're not really even keeping up with inflation. You haven't been under the 200-day on this one for... God. First time it dips under the 200-day is last year. It's a super well-run company, and you can see, let's go to a monthly. Because this will get us back. Just look. You're trailing that 50-day. And the only time you broke the 50-day was COVID. March 2020. So, that 50-day, this goes all the way back to 1994 where you're trading at $1. So if you told me 1994 you were trading at $2.26, by 1995 you went down to $1.50. And then you just started, here's the dot bomb where you're trading at $4.50. And in 2000 you go down, you 50% retracement. But you've just followed on this 50-day. And every time you get under that 50-day, not a horrible buy. But do I think that, again, this is monthly. So do I think it was probably a good buy here, September or, at that time? Look at the MACD. You're just starting to cross up, but you need a hell of a bull run to get back up to this $100. Let's look at SNDL. I used to trade Sundial, I think is the name of it. Sundial. Let's see. this is a crazy stock. I mean, the volatility. Look, you got the double bottom here. So you got support at $2. Book value is $4.48. But this is a problem because I think if I'm not mistaken, these guys had a problem. What was it? It was cash flow, I think. Yeah, they're losing $196 million. Their market cap is 555. So constantly, I believe, they actually, when they run up like this to $3 here, when you see these big run-ups, they start selling stock to get more cash. That's the problem with this stock. And that's the problem with most cannabis stocks is they just don't make money. The cannabis trade. So, Joe, the way I understand cannabis, and again, I think you guys know this. I'm a purveyor of edibles. So I go to Colorado and I go to Vegas, and I go and get brownies. Yeah, I mean, that's the other problem. But I go to the places where it's legal. I go and buy brownies, or I go and buy gummies, whatever I feel like. I then I'll ask some friends, what do you think I could get this for? You know, I'll pay I think it's like $25 for a brownie or something with all the taxes. It's been a while since I went out to Vegas and got some stuff. But it was like $26 for a freaking brownie, and you look at it, and half of it's fucking taxes. What can I get this on the illegal market? Well, it's about $5. You know, it's cheap. That keeps the illegal trade at a better margin than the legal stuff is just cheaper. So the only people buying the legal stuff are tourists or people who don't have local connections or people who just don't want to go to jail, one or the other. So that's and what you've got is you've got the legal growers still not being able to crack down on the illegal growers. So, for instance, if you go, there was a raid on federal lands down near Mexico, I think in Arizona, and they just found a shit ton of cannabis plants, and they arrested a bunch of, it was Chinese folks, and they were like, yeah, it's just slave labor. They just they brought us into the country and dumped us out here, and they said continue to work. So it's a horrible, horrible business. With horrible, horrible people, but I'm watching about balloons. Yeah, Sundial's great trade. I mean, shit, look at here. You know what we'll do here? I'll bring you back to the 65-minute on Sundial. Let's see. So here. I should let you see this one. I'll just, for instance, this 65-minute candle, you go back 4 years, 7,000 candles, okay? 7,000 candles is 4 years of testing. The 65-minute, when you buy when it crosses up above, you buy it when it's above the 8-day EMA. You sell it when it's below the 8-day EMA. This makes you 1,172%. You win 29% of the time, but your average win is 9.59%. If you just bought and held this for 4 years, you'd lose 98%. Now let's go 1,000 candles. Let's see. We'll go 2,000 candles, which is a year. 1 year. Trading sundial, you make 44%. Buying and holding the asset, you lose 68%. It's incredible. Here, let's go to, we'll go to a monthly chart so I can look at. Again, the asset says it's down 68%. We'll just go, yeah, look at that. February 2023, you're trading at about $2. February 2022, you're trading at $5. That 65-minute algo is complete, genius. And I've been trying to get it better using an RSI and stochastics, and I haven't done better. But I've been trying. But yeah, look, you got Devon coming back at 52.94. This traded all the way down to 51. Let's see. We're gonna go 4 hour. Yes. This traded low 52.45. I thought I got down to 51. 52.45. If this dips down into the 40s, man, here, let's see. Let's look at Devon. Your PE is 5, your forward PE is 6. So it is a little bit expensive, but you got a 9.28% dividend. PXD, you've got a PE of 7, but you have a 12% dividend. So year to date, this is down 8%. I think 200 is probably your PXD one. Let me see Tilray. Tilray is, let me see. There's only class 2 shares. My algorithm loses you 72%. Buying and holding the asset loses you 87%. Let's look at the 65-minute. The 65-minute will go 2,000 candles, which again is about a year. About a year at 2,000 candles. The 65-minute on Tilray loses you 10% versus losing 73% in the asset. So if I go down to 1,000 candles, yeah, you lose 14% versus losing 7% in the asset. So Tilray's a little worse. Okay, I'm getting out of here. It's 11 o'clock. I stayed on a long time. I will, not a super long time, but I'm going to start my weekend. It is windy as F out. It is cold, but it has stopped raining. So I'm going to take the dogs for a walk, take a shower, and indices check. Let's see. The indices are down 0.2. The NASDAQ is down 1.12. I bet I'm down even more. I'm down 1.13%. So, a little bit bad, but you know what? I got enough to pay rent for the next couple of months, so I'm okay. Year to date, I am up 12.71%. Brandon, you going to sleep? So giving back 1% today, it's not horrible. I will tell you from a SPY perspective, I think we see more way down. And I wish I would have gotten rid of my energy, but let's see what Oxy's doing. Because Oxy's earnings, I think, are coming up. Yeah. Oxy's earnings are coming up February 27th. I may add Oxy down here, honest to God. It's under 60. I don't know which one I want to add more of, Oxy or Devon. By the way, use that scanner on FinViz. If you guys are looking for stocks, that FinViz scanner is awesome. So Oxy is a 0.83% dividend. Their forward PE is 9. I'd add more Devon, to be honest with you. Their forward PE is 6, so it's less, but they pay a 9% dividend. God, I just think Devon. Is Devon trading at 53 now? 52.76. It's at the lows of the day, I think. Let's see. $52.45 is the low. Wow, it's windy out. Good night, Brandon. Sweet dreams. Brandon drives truck, I think, and sleeps during the day. Coke up 1%. Merck up 1%. Boeing is down 1.1. I'm going to hold on to my Boeing. I may buy a little bit more. If you guys haven't seen this Staley email to Jeffrey Epstein, it's disgusting. What a fucking scumbag. God, I hate fucking people like that.